Hey everybody, hey, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So we have a special day today, and basically we have the NFPs, the long-awaited ones. So the first ones for this year, for January. And yeah, everybody's waiting for that because again, we are expecting a lower number. The Fed is going to be keeping a close eye on the unemployment rate. So hey, stick around. I think you'll enjoy the session. Hopefully you will. And I'll see you in a bit. All right, okay, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here for Markets.com. So, ladies and gentlemen, I hope you're having a wonderful start of Friday. So, yes, we have NFPs today. We'll dig into all that, but before we go any further, let me just double check if everything is running smoothly. And whoever's watching right now, whoever's tuning in, can you please comment to me in the box, then let me know if you can hear me and see me well. Trying to avoid any big issues with technology. So yes, hopefully, like I said, hopefully it's all running smoothly and okay. Just wanted to double check that very quickly. So I think that's all good, all fine. Now, before we gonna jump into the markets, because we're gonna talk a lot today, and before we do that, let me have a quick read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. Let me finish off a few things here and there and we can continue. I'm not going to mute myself. I'm not going to disappear anywhere. I'm just going to sit around here. Wait until you will read the rest of the risk disclaimer. All right, okay, so hopefully you've got that done. And right now, just a quick mentioning of our Markets.com website. Let me just adjust the screen here a little bit. I think that there is, yes, there we go. So now it's much better. So there we go. I hope you can see it perfectly. So this is our website, which you can always check out for more information about us. Feel free. Yes, we feel free to get in touch with us as well, because again, if you have any queries or questions, we're always there for you. So look, ladies and gentlemen, let's without further ado, let's jump into the chart. So the first one I want to pick up here is Nikkei 225, the usual one. Look, I talked about this on Wednesday, and basically I said to you, like, keep your eyes on down for now. I mean, this is quite looking quite good, looking quite interesting for both, actually, for the bulls and the bears, and I'll explain why. Look, at the moment, yes, we're seeing some sort of weakness a little bit. On Monday, we saw let me zoom in here a little bit. On Monday, we saw a little bit of a push back up here. So basically like a recovery after all the tariff thing. Yeah, so because tariffs this week were were hitting the spotlight, and also Trump's remarks around Gaza. I mean, that's another craziness, but anyway, that's something for later on to see how it's going to go. But look, for now, at this point, I would say it this way. If we're looking at some higher levels, well, certainly wait for at least a pop above the 40,000 kind of 300 zone here on the cash index. If we can get a nice clearance of that one, then yes, potentially this could attract a few more buyers into the game. For the downside, pretty straightforward. A drop below this upside line, a drop below the 200-day EMA would be nice, and this way we could, yes, consider some lower levels. We got one of the BOJ officials, Tamura, that came out this week saying that they hope to see more rapid hikes. Okay, look, I mean, surely that's something that could be beneficial for the Japanese yen. However, for Nikkei, well, it's a tricky moment. So that's why I'm not excluding the downside here. In general, we had a good run. I think that a nice little correction back down here could be possible, could be nice. However, judging from this technical perspective here, you know, we are seeing something like an ascending triangle forming, which basically, according to all the TA rules, tends to break to the upside. However, as I said before, and I'll keep on saying what I said before, that we need to wait for a breakout first before considering the next kind of short-term directional move. So at this point, we're just observing the price action. Now, jumping very quickly into Australia, let's have a look what's happening there. There's some shifts here and there. Look, with Australia, we have the interest rate decision this month. So, yep, keep your eyes on that one. To be a little bit more precise, to just in terms of the dates, let me just refresh my memory. 18th of February, we'll get the RBA interest rate decision. So a little bit of time we still have until then, but what we're seeing here is some nice action here to the upside. So in a way, I'm going to stick to my game plan. And look, I mean, I talked about this idea. I talked about this 8,373 territory before. If we look at the, where's that analysis that I did here on on ASX 200, let me just, there we go, that was it. So basically, by the way, follow our page on TradingView, because again, we always provide you with good information there, but you could also find something useful for yourself, so feel free. So yes, for now, what I'm seeing here, like I said, is this is what I was seeing then. It was a nice area for a breakout. We got the breakout, we moved higher, then we actually drifted back down, retested that area. You can see once again it's proving to be quite a strong one, quite a good one, and now we're testing this area right here. It's not the all-time high. I mean, it was the previous all-time high, previous all-time high, so 8,522. We're testing that area right now. That's the highest point of December of 2024 and in general the highest point of 2024. We're currently getting a little hold up there, but hey, if the bulls still feel comfortable, look, I think that there could be some a further move to the upside. For the downside, what I would like to see here is basically a drop below the 8,373 territory, somewhere around here. And if we can get that drop, then wonderful, more sellers here could join in. The next target will be this upside support line taken from the low of the 5th of August, and then we'll go from there. So quick update on China. What's happening here? We're in this beautiful little range here. I talked about it on Wednesday. And with China, don't forget that they are releasing their PBOC 1-year loan prime rate decision on the 20th of February. So keep that in mind. But until then, I think that a lot of things will change. And for now, I mean, it's a beautiful, like I said, it's a beautiful range. For those who like to trade ranges, congratulations. It's something, that you probably like. However, for me, I'm waiting for a breakout. I'm waiting for a breakout on this one, and then we'll go from there. So at this point, long story short, if you're looking for some higher levels, I think a push above the 13,150 here on the China 50 index could be nice for the upside, but for the downside, a drop below the 200-day EMA, which so far is providing fantastic support, but even then I will be very careful near the 12,595 territory, somewhere around here, basically around that 600 zone. If we get a nice clearance of that one, then yes, I will consider a lower low, because first of all, it will confirm that, and I'll consider lower levels going further. Oh, by the way, I forgot to put something here in the chat room. Good morning, everyone, ladies and gentlemen. Good morning, everyone. Here we go. Yes. Look, what can I say? For now, that's the game plan. That's the case. Let's see what's going to happen next. I think that this will also depend on what's happening with the U.S. and all the tariffs. But I think that the Chinese economy is getting more and more resilient. So on the contrary, it might actually present some sort of opportunity, in my opinion. But again, we'll see, time will tell. But at this point, like I said, I'm approaching this from the technical perspective, and then yes, we'll go from there. Let me just double check something here very quickly, if the sound is fine. Yes, the sound is fine. Okay, so let's jump into the US market. So US 30 index here, the cash, look, I talked about this yesterday. We came again very close to testing the current all-time high, and we failed. We failed to kind of move above it. But look, we're knocking on the door. It's fine. At least that's like already like one step at a time, basically. So we're knocking on the door of that all-time high. Dow was the worst performer yesterday. Let me just double check. Yes, I mean it was. It gained. Right. Okay. So why is it not updating? Yes, so Dow was the worst performer, losing around 0.28%. Nasdaq was the best performer, of course, and the S&P is always somewhere in the middle. Now, look, I think for the Dow, we got a good run in general. It's already like, let's say, it's already doing quite well. I mean, we're knocking on this door, we're near the all-time high. My only question is, I mean, does it have enough steam to actually overcome that 45,000 mark and just go higher? Or is this actually enough? Or are we just gonna, hang around here somewhere and then wait until Nasdaq will go and hit that all-time high, a new one, and and then we can reverse back down? So if you watched me on Wednesday, I talked about this theory, and I do mention this a lot, that whenever the two from the top three indices, the Dow, S&P, and Nasdaq, when two of them go for an all-time high, it seems like they're waiting for the third one, and the third one goes ahead and does it, and then we join hands and then kind of retrace together back down. But is this going to be the case again? Let's wait and see, because I'm not saying that this is something like a guaranteed thing. No, but it's just something that I've observed over the years, and it seems like could be the case. But anyway, let's see. For now, that's why I jumped into the S&P 500. Look, I mean, we're approaching that all-time high again. At least we're trying to. The same as Dow, but I think Nasdaq is the one that is doing this more rapidly, because we're also in the earnings season right now. So yes, so we had some companies this week that delivered on their earnings. We had Palantir on Monday. I mean, this was a rocket ship, and it's honestly like boom to the upside. There we go. We clear the key area of resistance somewhere around here. Let me just grab a magnet. There we go. So we clear this area of resistance around 84.8, and look at this. I mean, wow, spectacular movement in general. Oh, the wrong one. Not this one. I wasn't meant to place this one. I was meant to do this one. So basically, we kind of did 30% on top. I mean, wow. I mean, that is spectacular. In general, from the beginning of this year, January, so when we dropped to this level here in January, around 60 level, look at this. We already made 75% just by now till today. I mean, wow. This was from the low. From the beginning of January, let's say, if you were in the stock, I mean, congratulations, you've made almost like 50%. But hey, who knew, right? I mean, in general, Palantir, yes, I mean, it's loving the moment right now. It's loving the Trump's presidency, because it does a lot of work with Israel. It does work a lot with Israel in terms of intelligence. And yeah, look, I mean, once, let's put it this way, for this company, I don't think that to finish the war or finish the conflict would be good. So this company unfortunately is heavily into that. Now, look, for now, what can I say? For now, I am just, like I said, I'm observing the price action on this one. I'm just looking at this. I mean, I'm wondering how much more it can go. But at some point, this will have to reverse back down. The same story like with NVIDIA stock, so something that everybody was also thinking, like, when it can reverse, and it does, and it can reverse. I mean, it can do that. So it did do that. So the same story, like I said, with Palantir, nothing is going up all the time. Eventually, at some point, it has to reverse. we'll see when we'll do that. Now, coming back to the situation here with the indices. And for now, that's my case. Look, we have the NFP today, so that's the main kind of topic, that's the main thing that we're waiting for. We're waiting for the NFP. Look, I threw out a little piece on YouTube on our channel. You can have a look at that one, but I'll just more than happy to repeat myself basically about what my projection is here, is that this week we had, let me just jump into US numbers. This week we had the job numbers from the US. So we had the job openings, which disappointed on Tuesday, there we go. But then we had the ADP figure, which came out on the higher side, and everybody was like, okay, so now we're a little bit unclear, what's going to happen here. Are we going to see like a higher number on the NFP or lower? Well, the moment the forecast, let's have a look. Ooh, we are dropping. There we go. Look, this was yesterday. Yesterday, when I was running the video in the evening, this was still at 170. Now we're dropping to 141. Interesting. Are we going to get a number which is going to be around 160, something like that? Because if so, then let's say if it comes out at around 160, if the actual number comes out at around 160, then we'll have a situation where, yes, we managed to beat the forecast. And so the headlines will be everywhere, we've managed to beat the forecast. However, I mean, we're still coming out lower than the previous, but that's fine, right? We beat the forecast. But if it would have been with the previous forecast here, wait, I'm looking at the wrong number here. There we go, 170. Okay, there we go, 170K. Look, guys, I mean, honestly, this is this is where I thought I'm looking at the wrong. I was looking at the correct number, but hey, that would have been quite interesting, to be honest, if we suddenly updated that one from the 170 to 141. I mean, that would be spectacular. Look, in that case, look, we're sticking with this 170. So my thing is that, right, yeah, looked at the wrong number, but could have been fine. Could have been quite interesting, actually. So 170K. What can I say? It's a little bit on the lower side, of course, but something tells me that it could still be, lower than that. But again, let's wait and see. Let's see what's going to happen. I'm not saying that this is, the lower number will for sure be the case. No, but unfortunately, we don't know. We don't have the crystal ball. So that's why I keep on saying to everybody else that, look, don't try to predict the numbers. Try to kind of, wait for the numbers to come out, see the market reaction, and then you can do something about it if you're comfortable with that. But if you're not, honestly, leave it, until all your boxes are ticked. Don't really, I wouldn't say don't really touch, the market. So basically with the 170K here. Look, what I said yesterday that let me just jump into the US dollar very quickly. At the moment, it's currently stuck here. And it's stuck near the 50-day EMA, shown as the green line, and also near that 107.5 zone. So if we get a nice clearance here, then great, more sellers here could join in. We could target that 100-day EMA. But in a way, if we do get a lower number, then this is something that could force the market to worry a little bit, or this could actually force the US dollar to drift a little bit more to the downside. Why? Because look, the Fed right now is in this mode, and it didn't cut in January's meeting. It didn't do the cut. It just kind of decided to postpone that, but we know that up until today, let me just double check this. So by the end of this year, we are expecting, let me just double check this in December, there we go. We are now expecting the percentage is higher for one cut only, right? If the number comes out lower, if the NFP number comes out on the lower side, then I think that we could actually see this one increasing again. The probability for 2 rate cuts could increase again. let's wait and see, because yesterday this number was on the higher side, and now it's shifting. So I think that a lot of things will, until until we get into June, that's when we're expecting a rate cut for now, because again, May time we're not expecting any cuts. March time for sure, it seems like that we're not going to get any cuts. However, if we see suddenly a very bad number on the NFP, then maybe this could, force the Federal Reserve to rethink the strategy and maybe, just go for that cut earlier. Certainly something that the new U.S. administration would like to see. However, I think that the Fed everybody understands that if they're going to drop the rate, the new administration will go on a spending spree, on a shopping spree, and that could result into a lot of roll into a lot of inflation later on. So, and which might be difficult to maintain. So that's where the Fed would have to go and hike rates. But at this point, they're not even considering hiking rates. They understand that inflation might pick up. So the only thing is that what they're going to try to do right now is just to control the market with words. We've been there. We've seen that last year, the year before that, where they just basically used the tool of potentially could be, we could raise, we could hike, or we could not, we might not consider cutting further. So this wording, they basically buy themselves time like this, and they can use it for controlling the market and trying to control people's spending and government spending. So long story short, for now, I think that the US dollar might understand, US dollar traders, investors might understand that. So maybe we could see a bit of a retracement here. But if the number comes out on the higher side, if the NFP number comes out higher than 170K, then hey, well, maybe this could give a little bit of a boost back up here. Look, the problem which I'm seeing here is that even if it comes out at 170K, above 170K, yes, we could see maybe a boost back here for the US dollar, but would that mean that we're going to surpass the 110? No, for that I would need to see like a number coming out above previous figures. So that's why if the number comes out higher than the forecast, okay, great. We could see like a little rebound back up here, but I don't think that this could be sustained for too long, and we could see maybe a drift back down. Either way, if I'm looking at some lower levels on DXY, I need to see it drop somewhere below this 107.5 territory. So let's jump into another index very quickly. Germany, the DAX, the German DAX, looking good. Look at this animal, honestly, creating a new all-time high. Amazing. So this is something that, of course, we're watching carefully today as well, because again, we do have we do have, like I said, the NFPs. So whatever reaction we're going to get in the US indices, this is what we're going to get in the DAX as well. Looking at this for now, I mean, it looks unstoppable. I don't know. I mean, honestly, it seems like for me like a last dance before another bit of a decline here. So I'm being very careful on this one, because again, not everything is that good, in EU, and there are fears that there's going to be some tariffs. But I think that given that they have postponed the Canadian and Mexican tariffs for now, maybe that's what's that's helping to drive DAX a little bit higher. I'm just looking at the economic data here. What do we have? Anything from Europe today? Nothing. Major trade balance came out on the higher side today for Germany. Industrial production, not very good. So, that's what I'm saying. Okay, trade balance, wonderful. Came out on the higher side, but industrial production on the lower side, I mean, that's not good. So that's what I'm saying. It's not all that great in the EU economy. However, I think there's a lot of headwinds, a lot of worries, but for now, I think everybody's watching the fact that, looking at the fact that tariffs have been postponed, Mexican and Canadian tariffs have been postponed. But you know, and maybe they're thinking that, you know, we're not going to get like the European tariffs for now. Let's wait and see. Let's I don't know, this crazy world right now is a little bit way too crazy, and anything can happen. Everything changes in a day, or sometimes even in hours. Let's jump from indices. Let's jump into the crypto world very quick. Actually, you know what, crypto world, let's leave it for dessert. Let's jump into Forex. Let's have a look at what's happening here. So a quick update on AUDUSD. I'm not going to spend too much time on this one, but I just wanted to say that, hey, if you are looking at the NFPs and if you are trading AUDUSD, for sure, yes, of course, you keep an eye on the US dollar index and the US dollar itself. So if we get some sort of weakness in there, certainly we could see a push higher here on AUDUSD. It looks quite interesting. We are approaching key resistance area, which is the 50-day EMA. But also I would prefer to wait for a push somewhere above the 0.6330 zone in order to consider some higher levels. Look, we have, as I said to you guys, I mean, we have the RBA coming out this month. Let me just again, was it 18th? Did I say 18th? Let me just double check very quickly. Interest rate decision in Australia, 18th. Yes, 18th of February. So, look, the rate Australia, the RBA has kind of kept the rate for a while now the same, and it kept it at plus 4.35. So if we're looking at a possibility that the bank could go and cut rates, then of course that's not very good for the Australian dollar. However, I think that the RBA is keeping the rate because I think that they understand that inflation might pick up again, and looking at Australian inflation, it's currently the latest rate is sitting at 2.4. But again, it has been on decline. But again, if suddenly it starts pushing back up, I think that they will say, you know what, let's not go for those, cuts. I think that the market will balance itself out, and I think we'll have to start considering rate hikes. Well, let's see how that's going to play out, and this is where Australian dollar could actually strengthen a little bit. Look, I wanted to show you again also on this chart because this is quite important. We had a good hold up near this lowest point of 2022, ladies and gentlemen. So yes, looking good here, looking this area near the 0.6170 zone. Yes, we violated it a few times, but actually it kind of held nicely here, and we had a nice rebound and pushed back up. So let's see if this is going to continue to do so. If we start dropping below that 0.6170, or maybe this 30 even, I mean, yes, this is of course pointing the door or pointing towards the lower levels and basically opening the door to some lower levels. So yeah, but again, at this point there is a potential for a bit of retracement in terms of the Fibonacci here. Yes, I mean, I think that this is looking good. Right now we're currently getting a hold up near the 23.6, so the next target could be the 38.2. Let's see. Very quickly on AUDJPY, one of my favorite ones here. So yes, I mean, this is my risk on, risk off monitor, and what we're seeing right now is a little bit of a decline. So look, what I'm going to say here is that for now everything's working according to the plan. We are dropping near below the 95.5 zone. And for now I am gonna lean towards the downside, and yes, I'm gonna continue targeting the downside on this one. Let's jump into the US dollar pair, USDJPY. So beautiful continuation move lower. Of course, the fact that the Mr. Tamura mentioned that he wants to do more hikes in the near future. That's of course, yes, that is pointing a little bit more, towards a stronger Japanese yen. However, I think that the market is also a little bit, despite the indices pushing higher, I think the market is worried a little bit, and there is this little fear right now happening, and that at the moment, while the US dollars seems to be a little bit on the weaker side, I think everybody's also enjoying the moment of buying the Japanese yen. Look, for me, I'm gonna stick to my idea. I'm gonna still go for the low here, and while we remain below this downside line, which is drawn from the from this one high, from this highest point of July of 2024, while we remain below all the EMAs here on my daily chart, my next target is the somewhere around this area, somewhere near this 148.63 60 zone, something like that. I think it's a good target, but again, let's maybe we'll actually reach something around here, the 149.45, and then we can go from there. So for now, I'm leaning a little bit more towards the downside. However, again, everything can change very quickly if the NFP comes out on the higher side today. USDCAD, very quickly, we're also in limbo a little bit. We're waiting for the NFPs. Let me just double check very quickly. So yes, by the way, China came out foreign exchange reserves, right? Okay. Look, we have the Canadian numbers as well today. So something to keep in mind, because again, the Canada's unemployment rate is expected to go from 6.7 to 6.8. So we're expecting a little bit of weakness there in the job market. Participation rate, we don't know. We don't have a forecast for that, but let's see if it's going to stick somewhere around the 65.1 zone. If it starts dropping below that, this of course also could lead to some changes and some weakness, and the part-time employment change as well. I mean, we have seen this one kind of going on a rise right now, so also a little bit of a, although it seems to be a good thing, however, it might be actually not a very good thing, because again, that means that a lot of people are jumping into part-time, and maybe the country is not working to its full capacity. So again, that's another tricky moment here. But of course, like I said, yes, the main focus and for everybody will be the US NFP number. By the way, with the US NFP, or actually to be more precise, with the unemployment rate. So what I've mentioned yesterday in my short little video on YouTube, that for now the number has been kind of ranging around the 4.1, 4.2 area. But if it suddenly jumps above that 4.2 zone, I mean, the current expectation is for a 4.1 number, but if it comes out by any chance higher than, let's say, 4.2, let's say 4.3 or even higher, I mean, that's where the market could get spooked a little bit. I think that this is where the Fed could be a little bit on the itchy side, because again, if employment starts dropping, and think that the Fed will start could consider maybe cutting the rate earlier. That said, I think it will still remain, as they say, always data dependent. They would need maybe a more subsequent kind of occurrence of a higher unemployment rate, and then maybe they could go in and cut the rate earlier. I think that when we'll get the next NFP in March, then that's where, like I said, that's when the Fed could, if we get another, let's say, higher unemployment, higher unemployment, that's where we could see the Fed maybe considering a possible rate cut a little bit earlier. But again, this is for now just pure speculation. Let's see how it's actually going to play out. At this point, looking at USDCAD, I mean, look, from the technical perspective, I would love to see this one actually traveling a little bit lower. But what I want to say is that for now, I'm just playing the waiting game. I mean, I'm not going to rush into this. I need to wait for that number to come out. Yes, look, I mean, somebody might say, hey, maybe we will miss the breakout here or something like that. But don't forget about false breakouts. I mean, this could actually maybe break out lower, but then it could reverse back up, and this is where, I mean, it's up to you what you like to do in general. If you like some sort of action like that, then okay, feel free, but again, promise me one thing, you will always have your stop loss in place, because again, it's very easy to lose out a lot on this. So one small movement or one big movement, and your account might be damaged. So be very careful. That's why I like to say that let the market settle down, and then you can do something about it if all your boxes are ticked. let's jump into another pair very quickly. What I wanted to pick up here is let's have a look at what's happening with the Euro Aussie. Actually, I haven't looked at this one for quite a while, so I like this activity right now. Very nice action here, up and down. Very nice little range here. So for those who are trading ranges, okay, congratulations. This is something for you. We're near the lower side of it right now. We're near the 100-day EMA. Yeah, if we can get a nice rebound right now back up, this could present itself with a nice opportunity for the bulls. Look, we in general, we look at range. I look at ranges this way, that we look at the prevailing trend, and the prevailing trend was to the upside. So the greater chance, according to all the TA rules, the greater chance for this one to break out is to the upside. However, I've seen this happening in the opposite direction. So basically, long story short, I think you just need to kind of wait for the breakout of one of the sides and then consider the next short-term directional move. So my only problem with the downside here is that even if we do break out lower, we have the 200-day EMA, which could present itself with a nice little opportunity for a little bit of a hold up, and we could then rebound back up. So if we do clear the 200-day EMA, then that's where more action to the downside could happen. But again, at this point, like I said, be very careful and consider all these options. By the way, ladies and gentlemen, whoever's watching right now, if you can just drop me a message in the live chat, say to me like, which instrument would you like me to cover, and I will do that very quickly. So if I have it in my list, of course, in my big list right there, what we can offer. So like I said, Euro Aussie is at a very interesting spot. So hey, let's see what's going to happen there. EURUSD, let's check this one out. I mean, okay, EURUSD is a little bit on the weaker side a little bit, I would say, because again, it's trying to make its way higher, but again, it's finding that resistance near the 50-day EMA right there. And the question is for me, will it have enough steam to travel higher? Even if the US dollar declines, okay, we could see a boost, a stronger boost to the upside, but we have a problem with the ECB, which continues to, cut rates. And I think that they will continue to do so. So that's the thing. If we are looking at some higher levels on this one from the technical perspective, then I need at least a push somewhere above this territory right there, the 1.0533-ish zone. That's the high of the 27th of January, or should I say the highest point of January. So a clearance of the highest point of January may attract more buyers into the game. At the same time, we could clear the 100-day EMA here, shown as the blue line, potentially opening the door towards the 200-day EMA. But again, at this point, like I said, yes, we might see a weaker dollar, but if the euro remains on the weaker side, then it's not really helping. So it's going to be like a battle of the two weaker ones. However, I wouldn't say the US dollar right now is the weaker one. At this point, maybe it's a little bit, but in general, I think it's still holding on pretty well. What I want to say next is that, like I said, keep your eyes on this. I mean, keep your eyes on the potential idea as well of maybe becoming like a range here. So we have this hold up on near this area right there, near this just around that 1.02 territory. But if it gets a hold up below this 1.0533, something like that, then we could see a reversal back down. So for now, that's what I'm going to do. I'm going to wait for this one to kind of make an exit, or at least try to make an exit through this barrier, through the highest point of January, in order to go to the upside. Let's jump into GBPUSD, because yesterday we got some data, a little bit of data from UK. Well, I mean, that was the BOE interest rate decision, and then of course, as expected, they went for a 25 basis point cut, and all 9 members were for that. And I mean, okay, I mean, that of course, like, that just dropped dropped the pair all the way down here towards the 1.2375, and well, what can I say? Now we're seeing a bit of a retracement back up. So what I said to you yesterday as well in my trading view idea, that I am not really getting very bearish on this one, just because, like I said, the dollar might weaken, and the pound is not the weakest one. Actually, let me just show you what's happening with the Euro GBP here. So as you can see, the pound kind of got stronger a little bit against the euro lately. And still, they're still both, you know, like trying to pull the rope. Who's going to be like weaker? Who's going to be stronger? You know. But in this case here, GBPUSD, in my opinion, that if you're looking for some higher levels, that wait for at least a clearance, some sort of clearance through this 1.2523 zone ish, because at the same time we could clear the 50-day EMA and open the door towards the 100 and the 200-day EMAs. For the downside, I would prefer to wait for a drop below the subside line, and then we'll go from there. Very quickly on GBPNZD, I like this pair very much, and it's very volatile, don't get me wrong, but I do like this one. And look, so far we're on the right track. It seems like we are trading above this kind of upside line, or you know what, we can draw a lot of things here. I think maybe it's becoming really kind of subjective. Maybe it's this upside line actually, so you know, it's all in a way subjective, because we can start drawing something like this here as well, as you can see. So we have a bunch of upside lines which could play out in a way. So long story short, I would say this way, that for now, while we remain above all, you know, all these upside lines right here, of course, yes, the trend remains to the upside. However, if we start, you know, slowly start clearing one by one, okay, this is where, you know, it could become quite interesting. This is where we could start seeing, you know, some moves to the downside. But again, at this point, I think NZD is not on the strongest side. Let me just have a look at what's happening with NZD USD here. It is trying to pick up pace. It's trying to, you know, get back into action against the Japanese yen. Of course, it's struggling against the Canadian dollar. Even against the Canadian dollar, struggling. CHF. I mean, it is trying to push back up here on the against the CHF and against the USD. Look, at some point they will have to, you know, it will have to. You know, push back up, but because we have the RBNZ interest rate decision as well coming out, where's that GBP NZD pair again? Because we have the New Zealand interest rate decision coming up, and that's coming up, I think, on the 19th, if I'm not mistaken. Yes, 19th of February. So the day after the RBA releases its interest rate. So we're gonna get the down one there, and look, for now, I mean, the expectation, I think that they're trying, maybe they're going to keep the rate. However, I don't know. I mean, they have been on a really strong cutting path for now. I mean, the last time they had the meeting in November, at the end of November of last year, where they cut the rate by 50 basis points. So are we going to get something like that as well? I don't know. I mean, this is something that I don't want to speculate way too much. If they do cut the rate again, I mean, I don't see this pair traveling lower for now. Let's jump into the commodity world very quickly. Gold, I mean, look at this animal. I mean, this is yesterday, yes, it tried to make its way a little bit lower here. Look at this, let me get rid of this. It did retrace back down. I mean, after we've created an all-time high on Wednesday. Let me just mark this, there we go. After we hit the 2,882, we yesterday retraced back down. But I think that this little retracement was just a little retracement, a temporary correction before another possible leg of buying. But at this point, I said to you before, and I'll stick to my words, while we see all-time highs, while we get these moves, you know, potential moves to the upside, I mean, I'd rather wait for a clearance every time of an all-time high before, let's say, getting very comfortable with the upside. At this point, I'm just observing the price action at this point. I'm not really getting bearish on this one, despite, of course, the idea of, yeah, I would love to see a correction at some point. However, I've noticed that the market doesn't always do what I want it to do, so I'll just go from there, you know. So 2,855 zone, I'll keep an eye on that one. If we start dropping below that, Yep, I will consider a little bit of a retracement back down here, somewhere towards, this upside line potentially. But at this point, look, I mean, it seems like it wants to go higher, but even with the upside, I would prefer to wait for a push above the 2,882 zone before getting comfortable with some higher levels. Let's jump into silver very quickly. Is doing a good job here as well, trying to pick up pace. It's stuck near the 32 mark here, so hey, I need a clearance of that one before getting comfortable with some higher levels. Let's jump into oil very quickly. Oil, that's absolutely fine. It's doing what I'm asking it to do, so this one is working out well. Look, we dropped and we stayed below the opening price of this year, of last year, because that's like where the line is. I mean, this one right there, it's this was the line. This is where we opened this year, and this is also, it's marking near the line where we opened, the level where we opened last year. So we're currently in negative territory for the year. And I think so far that's supporting my idea. My idea was to see further declines, just because I'm not really getting very strong on the fact that demand is there yet. Yes, we saw some reports of increased Chinese demand, but again, at this point, I think the country is producing, but not at that rate. And the fact that the new U.S. administration also is planning to drill a little bit more, trying to extract a little bit more oil, then that also increases the supply. So with the possibility of a weaker demand, even though there are some disruptions from some of the OPEC plus members, there are some, like I said, disruptions of some OPEC plus members in terms of disruption of production or delivery of their oil into the market. Still, I think that if US starts, extracting more, then it's a little bit, like I said, I don't see this one actually traveling too much to the downside, to the upside. Sorry. So yes, natural gas very quickly. Let's have a look at this one. I mean, this is near a key area of resistance, near the 50-day EMA. Look, I talked about this one previously. So for now, I'm just observing the price action because we're still below the downside line. I would love to see a clearance of this downside line and a clearance of the 50-day EMA and a clearance of the 3.40 zone in order to go higher. For the downside, I would prefer to see a drop below the psychological 3 zone in order to go lower. So yep, for now that's the game. That's the case. That's the game plan, and we can go from there. So jumping into the crypto world before I wrap up the session, ladies and gentlemen. So let's have a look what's happening with Bitcoin. Okay, look, we're stuck. I think that Bitcoin is also, market participants are also waiting for NFPs. I want to see what's going to happen there, because so far we're not really seeing any positivity or any news surrounding, that there will be some more support towards for the crypto world from the new elected leadership. Yeah, for now it's just kind of blank like that. So it's waiting. I think it's waiting for the NFPs. They want to see probably what's going to happen there. So what's going to happen with the US dollar, and then this will react accordingly. So, but the only thing is what's working here from my end is the fact that we're still in the box. We're still in this range on Bitcoin and on BTC USD. So look, we're near this. We're near this 50-day EMA. We're actually oscillating around that 50-day EMA. And if we do drop below that 50-day EMA, my next target is of course, the psychological 90,000 zone. But look, that's why I have my arrow from here, actually. I prefer to wait for a drop below that 90,000 zone in order to consider some lower levels. At this point, I mean, I just don't like ranges, and I just don't like those, and I don't want to really say to you that, oh, it's going to go lower, it's going to go higher at this point. No, I stick to my rules, I stick to my game plan, and if it works for me, it works for me. So, it might not work for you. However, I'm, sharing my vision here, my idea, and hopefully, like I said, if you have a different idea, please let me know in the comments. I mean, I think that, yeah, that would be quite good. Look, for now, like I said, pretty straightforward on this one. I need to see a clearance I need to see the crypto getting out of this box first before for me getting comfortable with any of the directions. Ethereum, this one's beautifully holding above this upside line. I've drawn this one recently, and this is beautifully holding above an upside line, which is taken from the lowest point of August of 2024. So yep, if we are looking at some higher levels, certainly a push above this downside line taken from the high of the 16th of December is required. At the same time, a push above the 200-day EMA would be needed. For the downside, a drop below the upside line, this is what's needed in order to go lower. Jumping into Ripple very quickly. Ripple is drifting lower so far, in a way so good for the bears. My next target again is this area near the psychological 2 level. I like it a lot because maybe the 200-day EMA, the 100-day EMA here shown as the blue line could approach this area and also provide a bit of support. And finally on Dogecoin, yes, everybody was hoping to see this one, to the moon. But look, I mean, I keep on saying, whenever it's way too obvious, it's way too obvious, So, we had it's always buy the rumor, sell the news moment in a way, or not always, but most of the time. So we got the the beautiful rally first, and before the U.S. Before the inauguration, everybody was then hoping to see that there's going to be some sort of like mentioning during the speech of the crypto, but then I think that was way too naive, maybe to even think that. So we are now drifting lower. Let me just adjust this and let me just see if this is gonna form something of a maybe falling channel. Let's have a look. So we're capturing this. If this is the falling channel or not, ish, kind of, I would say, ish. So maybe we can, stick to this idea for now. Maybe like this, something. Yeah, maybe this is a little bit more clear. But look, for now, I'm gonna, like I said, I'm gonna stick to this maybe falling channel idea, and I will continue targeting the downside here. But the problem is that I have this 200-day EMA, which could be a little bit in the way, which could provide a bit of support. So I think that let's not forget that there is a possibility for maybe a little bit of a rebound at some point. But you know what? If it starts at some, by any chance, if it starts dropping below the lower side of this falling channel, that's not really great, I think, for Dogecoin, and we could see this one actually falling further. So, ladies and gentlemen, that is it. That is it for this session. I really hope you found it useful. I tried to cover a lot of things here, and look, if I didn't cover something that you wanted, please do share that in the comments and let me know if you want me to cover something else. But if it's not today, then I can cover that on Monday. So join me, by the way, on Monday in my new session, week ahead session. So yes, Markets Talk. That's the name of the show. So hey, feel free every morning, grab yourself a coffee, switch on the show, and just kind of prepare yourselves for the day. So ladies and gentlemen, thank you very much. I shall see you on Monday, as always. Yes, 10 o'clock GMT plus 2 or 8 o'clock GMT time. Hopefully you enjoyed this session, and have a beautiful weekend, everybody. I'll see you later. Bye-bye.